take a look at how the Asian markets are faring.
Hi there, welcome back. Thanks for staying tuned to Market Cafe. You're still watching ET now. Let's take a look at how the Asian markets have opened up this morning, and well, they're largely mirroring what Wall Street has done yesterday, looking very positive. And I'm taking a look at all of these different Asia indices. Let's start by looking at what Nikkei is up to, and well, Japan's Nikkei is leading the gains in Asia as markets in the region have rose across the board following Wall Street's continued rally for a second straight day. The Japanese benchmark jumped 2% on open, and well, it's right there, and a 673 point uptick coming in for Nikkei. So well, strong moves coming over there as well. Shifting focus, investors will look towards the first quarter inflation figures from Australia tomorrow, with the consumer price index expected to rise 3.5% and mark its fifth straight quarter of slowing inflation. This is according to economist poll by Reuters. Australia rose 0.5% ahead of this CPI reading, but has lost all of those gains despite a good reading penciled in for Australia. As of now, rather flat with a slight negative bias is where Australia is trading. Moving on, let's talk about what South Korea's Kospi is up to. That climbed almost 1.8% on opening, and it's right there. Almost a 50-point uptick coming in for Kospi as well, and this is largely powered by a 3% gain in heavyweight Samsung Electronics that we did see coming in yesterday for Kospi's markets. Moving on, let's also take a look at what Hang Seng and Shanghai both are up to. Hang Seng also solid gains coming in, up 1%, almost 160 points uptick coming in over there as well. Lastly, also let's take a look at what Shanghai is doing. Flat with a positive bias, not doing much. 5-point uptick, 3027. That's where Shanghai is right now. Well, let's shift focus and talk about how we fared yesterday. Good trading session coming in for us yesterday as well. Nifty shut shop at 22,368, implied at 22,451, indicating a rather tempered start for us, but with a positive bias. So well, good moves expected today as well. So Shansi, we'll take a look at how that pans out for us.
Absolutely. Let's see how that pans out for us. But with
Hi there, welcome back. Let's keep it going with all the news and updates. And well, the RBI bulletin was released yesterday post market hours, and in the RBI bulletin, high frequency indicators showed robust domestic demand in March 2024. However, extreme weather and geopolitical tensions may impact inflation. My colleague Anurag Joshi is joining us with more details of this bulletin that was released. Anurag, hi, take it away.
The Reserve Bank of India in its April bulletin has highlighted that monetary policy must remain actively disinflationary to ensure the anchoring of inflationary expectations. Now, the central bank has noted that the treasury yields and the mortgage rates are ticking up in the major economies, and this is as the expectations of interest rate cuts are being paired by the financial markets globally. If you look at India, the rate transmission has been stronger in the case of public sector bank than among the private sector peers, and one of the examples of this is that the increase in the deposits and lending rates was high in the case of the public sector banks, and this is even as the lending rates of public sector banks remain lower than the private sector banks. On the heat wave, the central bank has said that there was a slightly later onset of the heat wave in 2024 as compared to 2022, and this year the heat wave has started in April, and this was in 2022, and this was in March. The high frequency indicators in the economy continue to show a sustained demand conditions in March 2024. But the extreme weather conditions, they are a red flag and they pose a risk to inflation, and this is along with the prolonged geopolitical tensions, and that could keep the global oil prices volatile.
all right, Anurag, thank you for those interesting details. But moving on then, IFL Finance special audit has begun as per the RBI's direction. This comes after RBI restricted gold loan sanction earlier this year. Astha Chopra is standing by with more details. Astha?
Well, the special audit for IIFL Finance has begun after the RBI has imposed the restriction on gold loan sanctioning and disbursement for the same. These activities will remain suspended unless and until the satisfactory completion of this audit. So this issue started on the March of 4th when the Reserve Bank of India had asked IIFL Finance to stop sanctioning their gold loan disbursement after they found something material supervisory concerns in their gold loan portfolio. Also, their other findings after investigations were there was a lack of transparency within the customers' accounts, and also it revealed that there was a non-adherence to the standard process of their gold loans. So these were the main reasons why RBI had imposed restriction for the IIFL on their gold loan sanctioning and disbursements. So also it will only can start their gold loan process after there is a satisfactory completion of the audit as well. And on the press release, they also said that anything which happened, they will support. The IFL Finance will support fully and will give their full support in the audit as well.
All right, Asta, thanks so much for taking us through that. We'll see how that pans out for IFL Finance today. Positive news flow because they are complying with RBI's norms and regulations. But let's get to move on then, because food regulator FSSAI has ordered quality checks on MDH and Everest. This order is issued after the Hong Kong government banned MDH and Everest masala, alleging that these contain ethylene oxide in their products. Samir is joining us on the phone line with more details. Samir, take us through this news flow. What are you picking up? Help us understand why this is happening and the implication of this on both of these companies.
Definitely, in the latest development, the food regulator has started taking the samples of the masala makers, the spices, in the powder form of not just these two brands that you have mentioned, that is Everest and MDH, but other brands as well. So the sample collection has been started, and now it will go for further detailed investigation. Further quality checks will be done. And it comes into light after we have seen that Hong Kong and Singapore, they raised concern. Even Hong Kong has imposed a ban on certain variant of the spices of the masala that is made by this MDH and Everest. It has been alleged that the masala contained pesticide, that is ethylene oxide, and after which the ban was imposed. And in the same consequence, now food regulator has started taking action. Firstly, they will be collecting the samples. They will find out that whether these samples or the masala or the spices, they properly follow the norms laid down by the food regulator. It will be checked out. The quality checks will be done. And if found guilty, then some stringent action might be taken. But it is also a fact that the spices that is exported, for that FSSAI has no such norms. Regarding export, FSSAI has no such norms, and for that particular case, the Spices Board has said that they will look into this case, they will raise the concern. But here domestically, the food regulator has come into action, and now they have started collecting the sample, and then further quality checks are being carried out.
All right, thanks Amir for all of those details. Moving on then, days after Vodafone Idea saw solid response for its FPO, Deepam Secretary Tuhin Kanta Pandey reacted to the strong subscription numbers as well. Sumit Chaturvedi is standing by with all of those important details. Sumit?
Well, the first official response coming from the government side on this, it's being said that it's a matter of satisfaction, as being said from the government side, and also raising resources for needed capex is an essential requisite for continued delivery of quality services to customers. That's been also one of the main satisfactory messages which has been delivered by the government side. We all know that FPO has been subscribed 6 times. Well, that's a matter of satisfaction, definitely, and it's coming at a time Vodafone needs funds very badly, because we all know that duopoly, otherwise there will be danger of duopoly in Indian telecom space. Vodafone here coming with strong set of numbers when it comes to raising funds. It's going to help it in expanding its reach when it comes to 5G services and making it stronger further for customers.
All right, Sumit. Well, thanks so much for taking us through that. That stock held on pretty well in yesterday's trading session. Vodafone was up almost 11%. Let's see if this rally continues even today. But viewers, with that, we'll slip into a very short break. On the other side, we'll bring you more stock-specific news and updates, so you stay tuned.
Welcome back. Thank you so much for staying tuned in. Well, it was an inline set of numbers for Tata consumers in Q4. The profit was impacted due to an exceptional item. When you look at our revenue, on the other hand, that managed to grow 8% in line with estimates. In fact, Vinny is joining in with more details. Vinny?
Good morning. And absolutely what we're seeing in terms of Tata Consumers numbers, I would say it's an inline number. Profit was a miss only because of the 216 crore exceptional item that we've seen, mainly because of the scheme of arrangement, the costs over there. There have some asset write-downs that have happened. So because of that, this is impacting in terms of the profits of the company. Margins have seen a sharp improvement, around 200 basis point expansion in terms of margins. We were expecting around 100 basis point expansion, so comfortably above what we at ET now were expecting. So yes, that's what we're keeping an eye out on. India business has seen a growth of around 11%. International business has seen a growth of around 7%. Slight bit of a slowdown that one could say that we're seeing for the India business in terms of the growth over there. Now, other than that, let's look at some of the other highlights that have come in. Beverage business, India beverage business grew by 3%, but tea volumes have remained flattish. Previously we had seen slight bit of a growth, so tea volumes this time have remained a bit flattish. Market share loss again has happened in the tea business. We've been seeing that they have been losing market share in the tea business, so that's something one should watch out for. The premium and sub-premium segment continue to do well. India food business saw strong growth, including Capital Foods. The growth was 20%, while like-for-like basis growth of India food business was around 11%, and volumes of India food business was 4% on a like-for-like basis. Salt revenue grew by 5% as well. Margin expansion mainly was because of most of the international markets. There was a pricing intervention that happened, softening in commodity costs, as well as strong operating cost control measures is something that supported the margins of the company. All in all, when you look at it, brokerages like Goldman Sachs maintained their rating of neutral, target price of 1,030 rupees. They say India's growth is slowing down overall for the company. Margins were driven by the international side, and they believe that the EBIT growth marginally ahead of estimates is what Goldman Sachs is saying, while Tata Consumers review coming in from CLSA, they're maintaining their underperform rating. For them, it was a miss on the top line as well as the profitability front, but margins were slightly better. So let's keep an eye out on Tata Consumers.
All right, Vinny, thanks so much for taking us through that, an inline set of numbers coming in from Tata Consumers. But let's shift focus to another FMCG major then. Vinny, HUL all set to release its numbers. What is the street penciling in? What are the factors to be watched out for? Largely take us through that.
So absolutely, in terms of HUL's numbers, we could be seeing a bit of a muted set of numbers this time, a growth of only 0.6% in terms of revenues. Profits of the company expected to see a decline of around 3 to 4%, and margins expected to see a slight bit of a contraction this time. 23% is the margin expected at versus 23.3%, so 30 basis point contraction in terms of the margins. Volume growth expected to be at about 2-3% level is what we're expecting, which has been going on as a trend for HUL in the last couple of quarters. Low single-digit revenue growth, mainly because of the rural slowdown. That recovery is not as fast as one was expecting, as well as increasing competition, competitive intensity, as well as in terms of increasing competition from regional players still continues. Demand trend is similar to what we saw in the last couple of quarters, so nothing new on that front. Food and refreshment, we're expecting a muted growth there, and subdued growth is expected in home and personal care segment as well. Now, overall, this time around, the margins are going to be impacted because there is that impact of increase in royalty, as well as there was a expiry of that has happened of the GSK consignment arrangement, because of which we're seeing a bit of an impact coming in on the margins. Let's keep an eye out on, in terms of commentary, anything that is coming in on the health food drinks segment that is there, because that's seen a lot of traction right now across the FMCG sector. So any commentary on that front, competition, how is that shaping up, demand trends, as well as raw material pricing going forward in terms of an outlook over there is key to watch out for.
Thanks, Vinny, for that Okay. Thank you so much for that update, Vinny. So we'll definitely be keeping an eye on HUL when they come out with their numbers. But let's get a move on then, and let's take a look at what the futures and options roundup is looking like. Ansh is standing by with that roundup. Ansh?
Right, so starting with Nifty first, as you can see in the chart as well, actually index faced some selling pressure from days high, but then it took some support at around 20 DMA to close slightly in green, and this was the third session when we saw Nifty closing in green. Also in India, VIX actually fell by around 20%, which is very positive for the market. But talking about futures and options, tomorrow we have Nifty expiry, and if you see the option chain, call writing is happening at 20 to 400, indicating strong resistance around this level, whereas on downside we are seeing very strong put writing happening at 20 to 300, indicating good support base around this level. But moving on to Nifty Bank, as you can see in the chart as well, index has closed within its previous session range, and above its support base of 47,600. This is a positive sign. And today we have Nifty Bank monthly expiry. So today we may see some volatility into the market. Also, the rollover data shows Nifty Bank has rollover of around 56% as compared to 79%. We still have one more session left, so we may see some spike in the rollover data. And this series we are seeing Nifty Bank, which is up by around 2.5%, and it has been advancing for third consecutive series. This is again a positive sign for the Nifty Bank. Now moving on to index options, we are seeing call writing happening at 48,500, indicating traders not expecting Nifty Bank to go over this level. So this is the level where we may face some heavy selling pressure. But let's also talk about FIIs. So in the previous session, FIIs, they added around 2,800 long, but they also added around 2,800 shorts only. So net to net, we were almost flat. But due to this, the total long position inched a bit higher from 34 to 34.3%. With this, the total short is at 3-year high, which is a bit of pessimism. But like we have been mentioning, that pessimism is also positive, as we may see some short squeeze happening into the market. Lastly, let's have a quick view on stocks as well, which will be in focus in FNO. And we are seeing long build-up happening in Bharti Airtel, Aurobindo, where short build-up in Reliance and IOC. So keep an eye on the stocks.
Thanks so much for taking us through that. We'll be keeping an eye on all of those stocks as well as the levels to watch out for. But Ansh, while you're with us now, the National Stock Exchange is set to introduce derivative contracts on the Nifty Next 50. Ansh, help us understand what are the offerings, how are these cycles going to work, what's the implication on the markets for this move coming in? Help us understand all of this.
Right, so NSE is getting Nifty Next 50 into trading for FNO segment. Now, Nifty Next 50 represents 50 companies from Nifty 100 index after excluding the Nifty main 50 companies. Hence, they are also called as Junior Nifty. Now, this index has exposure to 14 sectors, with top sector accounting for around 60% exposure. Let's have a quick view on some of the top stocks as well. And here we are seeing Trent, BL, Tata Power, Hindustan Aeronautics, and Indian Oil as the top 5 companies included in the index. Also, the traders can engage into FNO trading in the index with a lot size of 10. The trading cycle offers 3 monthly contracts for flexibility in trading strategies, whereas if we talk about expiry, then we are seeing that this index is going to expire on the last Friday of the expiry month. And if the last Friday is a trading holiday, the contract will expire in the previous day. Lastly, to encourage participation in this new index, there will be no transaction cost till at least 31st October, that is for 6 months.
Thanks, Ansh, for that update coming in. We'll definitely be keeping an eye out for that. But which are the stocks that you're keeping on your radar then?
Right, so Tata Elxsi will be the first stock in focus, as they have reported revenue of around 905 crore, which is down by 1%, whereas the PAT is down by 4%. Apart from this, ICICI Prudential will also be in focus, as they have reported profit of 174 crore versus 235 crore, down by around 26%, whereas the net premium income is up by 17%. Sign will also be in focus, as their revenue is up by 31%, whereas their PAT has jumped by around 80%, as well as their order backlog is around 2,170 crore. 361 will also be in focus, as they have also reported revenue, which is up by around 46% to 573 crore from 393 crore. Their PAT has also jumped by over 55%. Nelco is also in focus, as they have reported income from operations at 82 crore, which is almost flat to its previous year's quarter, whereas their PAT is up by around 7%. Lastly, MCX will be in focus, as their revenue is up by 35%, whereas their PAT has jumped by 1,496%. Let's also talk about Huhtamaki, and even they have reported the revenue, which is down by around 7% from 661 crore to 610 crore, whereas if we talk about the EBITDA, it is also down by around 19-20%, and in PAT we are seeing a downfall of 26%. So keep an eye on the stocks.
All right, Ansh, thanks so much for taking us through that. We'll be keeping a close eye on all of these stocks on the back of their earnings coming in. But another set of stocks to be watched out on the back of brokerage notes and major stocks over there as well. My colleague Gaurav is joining us to take us through a list of all the stocks that will be in focus on the back of brokerage notes. Gaurav, good morning. Take it away.
Well, yes, good morning. First, let's start with Bharti Airtel actually, because Citi has now maintained buy rating and increased the target price to 1,520 rupees per share. What they have done is that they have actually hiked the FY26 ARPU almost by 3% percentage because they see that we now have improved visibility over tariff hikes. Apart from that, they have also increased valuation for India mobiles, homes and enterprise segment for Bharti Airtel to come up to this bullish view and increasing the target price to 1520 rupees per share. Next, let's talk about Cipla because Investec, while maintaining buy rating and a target price of 1550 rupees, has actually initiated a long fast on this sector, on this stock. What they believe is that we have seen more than 10% of the fall from Cipla's 52 weeks high levels, and this is because of the Amneal's entry into albuterol segment. Now, what Citi believes is that this albuterol actually do not contribute much to its CPS, and because of this, we may see some earning upticks coming up in Cipla, and that is why they are being very bullish on this company with a target price of 1550 rupees per share. And next, let's talk about Thomas Cook because BNK has actually initiated with buy rating and a target price of 250 rupees per share. What they believe is that we have seen long haul of recovery and now the cost efficiency will fuel growth as well as margins from here on. Apart from that, Sterling is going to demerge from the company, which will add another benefit to Thomas Cook, and based on this, they are now expecting 17% revenue CAGR over the next 2 years to come up to a target price of 250 rupees per share. So all in all, on the back of these brokerage notes, we will keep an eye on these companies because we are seeing some kind of positive outlook coming up from brokerages on these companies.
Thanks, Gaurav. So there you have it. Those are the stocks that will remain in focus on account of brokerage notes. But Gaurav, talk to us about Axis Bank because that is all set to report its Q4 numbers as well. So moderation in NIMs is on the cards while asset quality could remain stable. What exactly is the street penciling in for this one as well?
Well, yes. Axis Bank will come up with the Q4 results today, and if you look at the numbers, actually we cannot compare the YY numbers because last quarter we saw, the fourth quarter of FY23, we saw one-time expense of acquiring Citi's India Consumer Banking portfolio. But if you look at QOQ numbers, net interest income is expected to increase almost by 1.9%, PPOP is expected to increase almost by 1.5%, and PAT is expected to increase almost by 2.4% this quarter on a sequential basis. What Street is expecting is that we may see some moderation in net interest income because of a decline in CD ratio and at the same time increasing LCR, which is liquidity coverage ratio. Apart from that, provisional numbers were not given by Axis Bank, but if you look at the Street's expectation, they're expecting advances to increase almost by 4.5% and deposits can increase almost by 5.5% on a quarter-on-quarter basis. What they believe is that CASA ratio could remain stable or we may see some uptick in this quarter, and based on all this information, they are now expecting net interest margin to decline 10 bips on a quarter-on-quarter basis to 3.9% levels. Talking about asset quality now, they do not see any kind of risk in asset quality. In fact, they are expecting credit cost to get lower in this quarter. And lastly, there will be few points to keep an eye on. So, for example, any kind of outlook on the growth, because last quarter we saw that growth outlook actually hampered the share price. Apart from that, any kind of outlook on cost of deposit will be also important from the management. And lastly, as we know that during the filings, management had said that they will consider fundraising, which could include an option of QIP. So any kind of comments coming up on the QIP will also be important for Axis Bank results, so that to derive the direction of the stock price in coming days.
All right, Gaurav, thanks so much for taking us through that. The con call for Axis Bank happening at 5:15 p.m. today. But we spoke about two Nifty 50 companies coming out with their numbers today, HUL as well as Axis Bank. Let's speak about the third one now, and that's LTIMindtree. What is the street penciling in when it comes to this Nifty 50 company? My colleague Anisha is joining in with all of the key expectations and factors to watch out for. Anisha, take it away.
Well, yes, the street is bracing itself for a weak quarter from LTIMindtree, wherein we are expecting that there could be a constant currency decline of 0.4%. Dollar revenue is expected to be flat at that $1,080 million mark because there will be lower pass-through revenues this time around. Plus, the BFSI vertical has been weak and discretionary demand hasn't really picked up. And all of that would mean weakness for the top line. That weakness on the top line is expected to percolate to the operational level as well. And that's why the margins are expected to dip to the level of around 15%, and hence even profitability might see a bit of a dip to the level of around 1,150 crores. The deal win is expected to be between that $1.4 to $1.5 billion range, so that's something we are watching out for. From the management commentary, FY25 outlook will be important, whether there will be a return of double-digit growth or not, or what happens to the margins because they have been coming under pressure as well. And then, of course, senior level exits. That's been one problem area for LTIMindtree. What's the commentary on that? Plus the revival of the BFSI, high-tech and manufacturing segment. That's something to watch out for.
All right, thanks Anisha for that interesting update. Moving on then to some more news away from stocks. The US Senate finally passes a long-delayed bill to provide a $995 billion aid package to Ukraine, Israel and Taiwan. $61 billion aid is planned for Ukraine, about $26 billion to bolster Israel's defense system and humanitarian efforts in Gaza as well. But moving on then, residents of Bengaluru will witness a rare celestial event today, where shadows will disappear from 12:17 to 12:23 p.m. today. The event occurs when the sun aligns directly overhead so that object casts a shadow. So that is for Bengaluru, but moving on, with heat waves expected to persist for longer, IMD decided to issue tailored election-centric forecast with a 5-day lead time for all the remaining 6 polling phases. So important move coming in from the IMD as well.
Well, let's shift focus, take a look at what's happening on the political front. And in the first reaction from the Gandhis on PM's Mangal Sutra and Muslim attack, Congress leader Priyanka Gandhi recalls her mother Sonia's sacrifice, says, "My mother sacrificed her Mangal Sutra for this country." The Congress General Secretary was referring to the assassination of her father Rajiv Gandhi, who was killed by Sri Lankan Tamil extremists in 1991. Well, an External Affairs Minister S. Jaishankar hit out at the Western media over its unfair criticism of India. Addressing a forum in Hyderabad, Jaishankar said that the Western media acts as political players in the country's elections and not because it lacks information. Jaishankar alleged that these are games that are being played with India. Well, let's shift focus to sports then, and in the latest from the Indian Premier League, Marcus Stoinis' unbeatable century powered the Lucknow Super Giants to a thrilling win over MS Dhoni's Chennai Super Kings. Put into bat, CSK put up a decent target of 211. Also coming in was Ruturaj Gaikwad's century, which was in vain. In reply, the Super Giants chased down the target with 3 balls remaining.
Alright, with that, we're timed out on this edition of Market Cafe. But as we bid you goodbye on this particular edition, listen to what Kotak AMC's Harsha Upadhyay had to say, because he talks about sectors that he expects to have an upper hand in Q4 earnings. Take a look.
Auto components, cement, these are some of the names that we like. We also like industrials. There has been a very, very strong order inflows that have been seen across the sector. We do believe that at some point of time, the execution will also pick up, and margin should remain quite strong, given that the commodity cycle is still benign. We also look at pharma. Pharma should also show reasonably strong earnings growth, better than market average earnings growth. So these are some pockets where we think earnings growth will continue to remain quite strong. And hence, even though the valuations may be a little higher than comfortable levels in some cases, that may continue as long as earnings growth continues in this trajectory.
Speaking of earnings growth, give us a sense, Harsha, as to where is it that you are expecting there to be, a positive surprise on the upside, and where is it that you believe that the disappointments will continue when it comes to earnings?
This quarter is unlikely to be a very big quarter, either in terms of positive surprises or negatives. In fact, this is one of the slowest earnings growth that you will see if you look at the last couple of quarters. So this quarter, we will see probably about 6 to 7% earnings growth on a year-on-year basis for Nifty basket. However, for the full year, financial year 24, you will see still upwards of 20% earnings growth. So to that extent, thanks to a somewhat unfavorable base of last year, last quarter, we are unlikely to see big numbers in this earnings season. So to that extent, we may not see too many companies delivering very, very strong results or very, very muted set of numbers. But within that overall view, we also find IT services, for example, will remain muted. Even going forward, I think the volume momentum continues to be weak. The margins have not been great. There have been several verticals which are still showing a decline or very, very slow growth. So
if you like this video, then like, share and subscribe to ET Now.